Good evening, everyone. Welcome to Banao Bharat Trading for Living Monday live session. 18th of September. Markets have continuously closed above 20,000 since last Monday. Well, this is the Nifty chart. You can see here last Monday was September 11th. So on September 11th, it had for the very first time crossed 20,000, and since then it's been one full week, whole of last week plus again today, Nifty has been trading around 20,100, not significantly higher from the 20,000 close, but then what is significant is it's been 6 trading sessions and this psychological mark of 20,000 has been held. 20,000 was not just a psychological mark, it was also another technical level, simply because the previous high in the month of July was at around 19,980, which was almost 20,000. So this crossover above 20,000 was actually a significant event, and market is showing resilience above this level in spite of not so very good global cues. So it's very clear our markets are getting its own orbit, and we might continue to do the same in the coming days also. Yes, market might pause here and there for some time, and there may even be a prolonged correction that might be coming up in mid cap and small caps. But as far as we are seeing action in large cap stocks, either in terms of IT or PSU sector, there is some hope this Nifty rally may not get fizzled out very soon. There may be a silent movement, just like how we have seen for the last 6 trading sessions. But there is nothing wrong to be on the cautious note also. Tighten your stop losses if with respect to the investment portfolio, especially if they are in small cap and mid caps. And if you have some spare cash, then still this market is a buy market for large cap stocks, and you can definitely see some value getting created in the coming days if nothing goes seriously wrong. There is no major negatives except that the global cues are not so very encouraging. But having said that, in spite of global markets not doing so well, our markets have not stopped doing well. So there is more to believe that our markets will continue to do well in the coming days also. And even on the intraday charts, there are still no signs of any major sell-off. This is the chart of Bank Nifty. Since September 11th, from the lows of 45,000 to the highs of 46,375, and today again trading around 46,000. It was just towards the end, the last but one candle, that is 3 o'clock to 3:15 candle, has shown some negative sign. It has cut yesterday's low, which also happened to be the sell level. Large part of the day it was within the sideways movement, within the trading range, but then in the last but one candle it has kind of given up, but it is not seen even in the Nifty chart. Just Bank Nifty alone in the intraday time frame has today towards the end with volumes broken down critical level which was yesterday's low, which also happened to be the reversal level. But Bank Nifty is backed up with many PSU banking stocks which are doing exceedingly well. We have SBI as part of the index with good amount of weightage to it, and SBI has been doing well. Most of the PSU banks, it could be Canara Bank, Bank of Baroda, or it could be like kind of smaller banks, PNB or Indian Overseas Bank. Many, in fact almost all the PSU banking stocks which were languishing for many years now have suddenly seen some traction, and good amount of buying is happening in those stocks. The large caps like Canara Bank, PNB and SBI, Bank of Baroda, these four stocks were always there in the index, as well as they are part of the F&O for a really long time, and there has been good up move in the recent days, especially in these SBI, Canara Bank and Bank of Baroda, these three stocks which are in F&O, which we are tracking also. So on the whole, there is all the reason to believe this bull run has some more steam left before it shows any major signs of reversal. Until then, the theme will be start positioning yourself in large caps, start going light on small caps and mid caps. When it comes to trading portfolio, identify some of the automobile sectors stocks like Tata Motors, Hero Honda, Maruti, and also some of the IT stocks like which are in F&O, Infosys and Wipro. Of course, TechM also is doing well now, so is TCS. Many large caps, or I would say like most of the stocks that are there in the F&O segment, they are categorized into the large caps. Large caps rally has not yet happened in this bull run which we are seeing since March. So it's critical that we be in this rally in the large caps, so that we can see while Nifty travels towards 20,400 or 500 or 600, it will all be taken higher by the large cap stocks. But do not forget to have some tight stop losses in terms of the stocks which have already given you good returns. In fact, don't even hesitate to book profits and move into the ones which have not yet started participating, because the time is ripe now. Anytime the ones which are not participating will start participating any moment now. Nothing wrong in being the early bird and start picking in small quantities the ones which have not yet started participating. Of course, keep a overall view on the global developments. If there is any major crack, in fact, though the global markets are not doing exceedingly well, they are not collapsing, they are not falling big time, they are doing their normal time correction and little bit of price correction also, but nothing is looking very alarming as of now. Even the ones people who are tracking the dollar index, they are also little bit surprised and little concerned. If the dollar index goes higher, then the emerging markets may feel the pressure of it and may correct. That could be the case, that has been the case in the past also. Yes, that is a matter of worry, but these interlinking does work sometimes but doesn't work many a times. There was a time when there was entirely negative correlation between crude oil and the equity market, but somewhere down the line the correlation or watching of what did the crude do overnight has faded, which means people are now looking into the market, our Indian markets, on its own merits. More than that, the introduction of expiries on all weekdays has shifted people's focus from too many other things to very specifically to those particular expiries on any given day. Monday we have mid cap expiry going on, Tuesdays are Fin Nifty, Wednesday now the Bank Nifty, which was on Thursday's expiry, has got shifted to the Wednesday expiry. It's been one full week now. September 6th was the new revision date. So then Thursday there is Nifty as usual, and comes now the Sensex on Friday. So people, as soon as they get up in the morning, they are not too much concerned about what the crude oil did, what the dollar index did, what the European or US markets did. They are focusing on what is the levels that are there on Fin Nifty or Mid Cap Nifty or Bank Nifty or Sensex or Nifty. So the focus is on that particular day, and any arbitrage opportunities of overnight developments are taken out in the first 15 minutes itself. Either markets gap up or gap down to the levels which they have to adjust it based on the overnight developments in the Western worlds, and then they just play the particular day's expiry in the options market. There is a growing concern about how the retailers are participating in the option segment, right from influencers to big time players as well as media, and the regulators also to some extent. Looks like they are closely watching the daily expiries and the kind of volumes that are being generated in our Indian markets, which according to few sources, Indian derivative segment is the biggest now in the world. Well, unfortunately the base segment or the underlying asset segment is not that very big enough in terms of even the rupee terms or the dollar terms to justify the kind of action that we are seeing in derivatives segment. Agreed. But then this phenomena of very high volumes in intraday might continue for some more time, until unless some big mishap happens, or until unless there is some big crash or big wiping of market capitalization. There is no big worry in the regulator's mind or in the minds of the exchanges or the market participants who are actually seeing some big returns, especially the brokers. So that being the case, individuals or retailers voluntarily they are lapping this options product. Retailers are not complaining. Option buyers or sellers are not complaining. FIIs, DIs have not complained. Just that everybody is concerned about the volumes that are happening, which they know, like the underlying asset is not justifying the kind of volumes that we are seeing in our markets. But my take is this phenomena might continue for some more time. Until when, we don't know, or maybe until next major crash. So will these activities create a crash? I don't think so. These activities may not create crash as such, but yes, there might be here and there few stray incidents where market participants might lose big because of certain algo errors, or sometimes the consequences of high frequency trading, or as they call it as fat finger errors. Anyway, be cautious about your positions. That is all we can do. We cannot change how the market functions. All that we have to know is understand how market functions and then see how you can participate in that and generate certain alphas for yourself. Tomorrow is a holiday. Actually, in the south, today we are celebrating Ganesha Chaturthi, but in some parts of the world, tomorrow is also Ganesha festival. So wishing everyone a very happy Ganesha festival, hoping all the obstacles that are there in your lives gets cleared and you will set yourself on the path of prosperity and peace. Tomorrow is a holiday. Let us all once again meet on Wednesday. Until then, Om Swasti.